welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, recently we have seen companies coming to the public market in unique ways. The most recent high-profile example of that is Robinhood.
Right.
Let's take a look at some of the different methods companies are using to access the public markets at a high level.
Well, Steve, we'll start with just the traditional IPO method. And this is where companies go on a roadshow, marketing their stock to institutional investors. And the goal of that, or the roadshow, is to create demand. And then based on that demand, you can set an IPO price range for the stock. Now, the institutional investors generally gain access to the stock at that IPO price, where retail investors will gain access to the stock when it starts trading on an exchange. And many of those retail investors are trading that stock hoping for a pop in price. But be aware, it can work both ways. Those IPO stocks can go down just as well as they can move up.
Yeah, Travis. And the next, we've seen companies go public with either a direct listing or a SPAC. If you are a company and you're confident there is demand for your shares, like this environment that we have today, you can skip the traditional IPO process and you can access investors directly. Mm-hmm. But you need to be aware of a few things. If demand is low, the price for your stock, you may not get the price for your stock and raise the capital that you expected. Mm-hmm. And for people buying that stock, you need to be aware. There may be insiders that don't have a lockup period selling in to you buying and into that hype. And so that can affect the underlying price of the stock. And now, moving on to the SPACs. Okay. SPACs also become popular, have become very popular. And these are these blank check companies that we've talked about in a previous video. They go public for the sole purpose of acquiring another company, don't they? And beware, SPACs may pay higher prices for the target company than you would want. And you may need to have a lot of faith in that sponsor to actually achieve what the SPAC's mission is.
Yeah, and finally, Steve, then came Robinhood. That you alluded to at the beginning. The company known for meme stock trading, and then it just became a meme stock itself, and they took a unique approach to going public. They used the traditional IPO method through Goldman Sachs and JP Morgan, but they held back 35% of their shares and offered them direct to users, on Robinhood users on their platform. So this is unique, Steve. So you have Robinhood let users buy Robinhood IPO on Robinhood.
Now, that gets extremely confusing.
So what we're seeing here is the IPO landscape is shifting. It's becoming more democratized, and a wider range of investors are gaining access to it initially. But it's also important to point out that IPOs, they're not for everyone. Before investing, you should consider your risk appetite because, as you pointed out, these can be volatile. I mean, the price is going to move. And how are they going to fit into your overall asset allocation and plan? Just think about that before you start throwing money into it.
Absolutely, Travis. This has been great. I look forward to it next week.
I look forward to it as well. Thank you for watching this week's Exchange.
To make sure you don't miss out on future discussions, please follow us on social media.
Make sure to like and share our videos, and we'll see you next week.